Welcome to the Capital News. I am your host, Alex Karitis. Today is Tuesday, June 6th, 2020. Thank you so much for joining me. Title of today's podcast, The Fed Losing Control. This is a question mark, okay? For the sake of argument, we'll give the Fed the benefit of the doubt. I try to be a fair guy here. We've done this with the Federal Reserve before. Of course, wink, wink. We know that they've lost control. Just like when we discussed the Federal Reserve last year, are they out of ammunition? Yes. When we also gave them enough rope to hang themselves last September during the repo madness crisis, we said, well, okay, maybe it is just going to be a one-off. For the sake of discussion, let's give them the benefit of the doubt. That was supposed to be temporary. They're still very much involved in that market, even though they're just simply becoming the market on both sides of it. So is the Fed losing control? Today marks the first day of the two-day FOMC, Federal Open Market Committee meeting. Tomorrow, the Fed will conclude that meeting and announce their decision tomorrow afternoon, 2 p.m. And then I do imagine that Chairman Jay Powell will give a press conference, answer some questions. Most of them will be softball questions, unfortunately, because that is par for the course. What are they going to do? What are they going to say? How will the markets respond? A planet of nearly 8 billion people waits in awe for 12 eggheads sitting around a table determining what the cost of capital should be. Does that make sense to you? It shouldn't, because it doesn't. But that's the world we live in. It's one in which we've lived in for quite a while. And it's got to stop. It's too much control. It's too much power. It's too much influence. That's not how it's supposed to work. Period. End of story. But they're going to come out. The market is expecting them just to hold rates at where they are, which of course is near record lows here. Zero bound once again. No major shock, not going to go negative. Most likely they won't this time, but negative rates are coming. They're already here on a real basis. Don't forget this, very important. They're already here on a real basis. It's just a question of when will they be here on a nominal basis? When will they actually put that little negative sign before some other figure? Well, time will tell. If you get another massive market sell-off, that could be it. Could be another emergency meeting over the weekend for the Federal Reserve and company. But the other thing, and we alluded to this yesterday, because yesterday the National Bureau of Economic Research made it official that the United States is in recession. The peak month, February of 2020, the peak quarter, the fourth quarter of 2019. No surprise to us here at the Capital News. We've been talking about this really since this podcast has been online last February, that there were cracks in the system, that the business cycle was long in the tooth. In fact, it was the longest business cycle expansion ever in U.S. history, going all the way back to 1854 when they started keeping records on the business cycle expansion and recessions. What to do now? What to do now? We're in recession. The stock markets keep going up. A little bit of a pullback today on the Dow, the S&P, and the Russell. But the NASDAQ, it just keeps going up because that's a law. It was signed into law, a couple of weeks ago. The NASDAQ's not allowed to have a down day, something like that. Correct me if I'm wrong. FOMC, already at the zero bound. Already pulling out all the stops with all of these acronyms, all of these facilities. A, B, C, X, Y, Z, 1, 2, 3. What are they going to do next? As we stated yesterday, what happens if they lose control of the yield curve? And this is what has been discussed in the media for quite a while, past couple of months, as a potential tool in this infinite toolkit that central bankers seem to have. Yield curve control, YCC. Are they going to discuss this tomorrow? Probably. Are they going to announce that that's what they're going to do? I am not so sure yet. They might allude to it. I imagine there will be some questions, a nice setup question from somebody. Coincidence, but we'll see how they phrase this. Because nobody wants Uncle Sam's junk. Junk bonds across the curve. Nobody wants them. Even Steven Mnuchin, our Treasury Secretary, testifying before the Senate Banking Committee. Yeah, we were thinking of putting a long bond out there, the 50 and 100-year bond, and we hired some consultants to see if there was any sort of appetite for it in the market, and we decided not to do it. Why? Bingo, it's junk. Nobody wants it. I wonder if $26 trillion in national debt has anything to do with that. Or a $4 trillion deficit just this year alone, and it will be worse. It will be worse. Make no mistake about it. They don't want it. Federal Reserve's the only one buying them up. And this is pretty true across the board when it comes to central banks buying up these bonds, right? Because it then becomes not a question of purchasing a bond because you just want the coupon. You want the safety, quote-unquote safety of that bond because it's backed by a government that has the ability to tax, the power to tax, and also the ability to print its own currency. But because you're going to get a yield off of it, not enough. Don't just want the yield. Because there is no yield. So what do you got to get? You have to get a price increase. So you have to hope that a central bank continues to purchase them to get a capital gain out of it. It's not how it's supposed to work. It can work that way. And people can be very successful bond traders going off of the price. But what about those long-term guys that are really looking for it for the safety, for the risk management, and for a decent yield? Well, there is no decent yield. There is no decent yield. This country can't tolerate 2%, 2.25%, 2.5%. Can't tolerate it. We know this. We witnessed this back in the fourth quarter of 2018 already. Market didn't like it. Thunder thumbs didn't like it. Economy can't take it, evidently. So what to do? YCC. Yield curve control. More control. Can't let it be. You got to do something. Like Herbert Hoover said 100 years ago. Got to do something. It's all in your face, ladies and gentlemen. Yield curve control. Do they have that authority? Do they have the power to really do this? And even if they do, should they use it? Aren't markets supposed to operate? Aren't the markets supposed to determine what the value of a dollar is? The cost of capital? Aren't the markets supposed to determine the price of a bond and its corresponding yield? The answer is yes. Should be a no-brainer. Yet here we come with more control, more centralized planning. What could go wrong? The Federal Reserve knows what could go wrong. Jay Powell knows. He knows what could go wrong. Not could, but what is likely going to happen. And that's a spike in yields. That's why they're trying to control it. Now, how are they likely to go about doing this? At first, it's going to be rhetoric. Because for some reason, the crackheads on Wall Street, well, I guess I just answered my own question, they're crackheads, they seem to continue to believe that the Federal Reserve does have ammunition, that they still have some type of credibility. They don't have ammunition. They don't have credibility. They don't. But I guess if enough people believe that they do, well, then what's the difference, right? That's what we're witnessing right now, a complete disconnect between the economy and the stock market, and we're having one heck of a rally. One heck of a rally. We'll see how much longer it lasts. And if history's any guide, it can last longer. Make no mistake about it. And it is a presidential election. and President Thunderthumbs is obsessed with the stock market, and the administration is in control of a lot of printed money because of the Nobody Cares Act. So you do the math. Can it keep going? Oh, yeah. Most definitely can. Is it rigged? Oh, yeah. Most definitely. And you make money on both sides of the coin, ladies and gentlemen, especially when you know what's going to happen. Now, I don't know. I'm not in the inn. I'm not in the club. I'm out here with you getting beat with it. But there are those in the know. That's the system we have. It's rigged. It's control. It's more centralized planning. I didn't vote for this. I don't support this. Nobody should. It's ridiculous. In the United States of America. Free market capitalism completely out the door. There's supposed to be a cost of capital. The markets are supposed to determine it. 12 eggheads sitting around a big table determine the cost of capital, and now not only do they want to go with that, which they've obviously been doing for years, now they want to use yield curve control. Because if the market has its day with the bond market, that's it, Fort Pitt. The bond market is the biggest market in the world. That's it. I can't even express how devastating this would be if the bond market blew up. Huge. Everything else would collapse. All other markets would collapse. There's $250 trillion in debt floating around out there. $250 trillion. And everybody thinks that this is somehow going to be a miraculous V-shaped recovery. Everybody's just going to go right back to the way things were, which was completely unstable, unsustainable, insane, asinine. Pick your word. Yet the crackheads think that that's where we're going back to. It's truly a fascinating time to be alive. It really, really is. So they're going to come out, likely the Federal Reserve, we're going to talk about it. And just by talking about it, the markets may bid it up. They might nibble. They might nibble on that hook. Let's see what happens here. They said, well, if the Federal Reserve's saying it, well, they're going to do it. So we'll do it for them and just sort of price these bonds accordingly till we get to that yield that they are looking for, which of course is going to be lower than what it otherwise would be without the intervention, rhetorically or actually through some sort of open market operation. This is such a joke. Complete joke. You have no idea. But this is where we are. Bond market blows up, stock market blows up. Although the way the stock market's behaving, if the bond market blew up, well, the stock markets, it might be all-time highs. Might go up 20% in a day. The way they're doing it. Bankrupt companies rallying. So it's out of control. These are the degenerates that got an extra $600 on unemployment. Sports aren't playing. So they can't go to the casino. They can't get on their apps and make bets. So, hey, let's try the stock market. And now everybody's making money because you can't lose. Sign of a top? I don't know. We'll see. Maybe you can keep going. Most definitely a possibility. This is the financial world of Oz. There is no credibility. They have lost control. This is all a con game now. A confidence game. A confidence man. You know it as a con man. That's what's going on here. From the White House to the Capitol to the Federal Reserve. I don't care who you are. I don't care what party you're affiliated with. This is a con job through and through. $20 is a crime, 20 trillion ain't. Check out that podcast. Put things into perspective. Understand what's going on right under your nose. More control, more central planning. All this is doing is sowing the seeds for the greatest depression. Period. Stop. They're not allowing these markets to clear like they're supposed to. They're keeping zombie companies alive. They're creating more zombie companies. It hurts those companies, hurts the employees, hurts the stakeholders, hurts the consumer. All because we can't go through some pain to get to the other side. Nothing's easy. Nothing's easy. But kicking the can down the road and putting all of the costs on future generations is immoral, unethical, un-American, and it's damn right criminal as far as I'm concerned. Yet here we go, kicking the can as far down the road as possible. And again, the government was trying to do it for another 50, 100 years. Wouldn't you like to take out this bond? Wouldn't you like to give us your money for 50 to 100 years and we're going to give you 1.5%, maybe 2% if you're lucky? Well, what's inflation? Oh, don't worry about inflation. There is no inflation, so you're fine. At least the market had enough sense to say no to that. So that's what the Fed's likely going to do. They're going to keep rates the same. They're going to update us on these facilities. Somebody's probably going to ask a question about yield curve control. It'll be interesting to see if Jay Powell brings that up in his statement or if he is asked the question. That'll be interesting. That'll be interesting. But if it's a question, I imagine it'll be a softball question, sort of setting the stage for what's likely going to come. Because if you pay attention, and we've discussed this here many times before, MMT, modern monetary theory, I was always curious as to why the media was throwing that around about a year and a half ago. What is this MMT? Everybody knows it's junk. Why do they keep bringing it up? Even early on, it was dismissed by everybody. Even the talking heads on CNBC and Bloomberg and all that stuff. Now it's somewhat mainstream. It's just sort of, that slow boil, get the people used to this stuff. Is that where we're headed? Is that where we already are? MMT, let's just print money? Like we said, it's the panacea for everything. Then why do I have to pay taxes? Why do you have to pay taxes if all you got to do is print the money? What are you going to work and giving them 30% for? Ask them. Write a letter. Send it to me if you're afraid to send it. I'll put my name on it. What else we got? Market performance. Overnight. Futures trading. Dow. S&P, NASDAQ 100 all up about 0.5%. NASDAQ 100 is trading above 10,000. Of course it is. Why wouldn't it? Across the pond, a big red day. Anywhere from negative 1.5% to 2%, depending on the index. Cash trade in Japan is relatively flat, but up slightly. Cash trade in Australia is also up about 0.3%. On the commodity front, WTI is trading at $38.24 a barrel. Brent, $40.60. Natural gas, $1.73. Gold is at $1,716 an ounce. Silver, $17.71 an ounce. A little bit of a bounce back in the precious metal space. Not a surprise to us here at the Capital News. Uncle Sam's 10-year junk note yielding 0.83%. We'll see for how much longer. Very important. Pay attention to this. This is no joke. Yield curve control. Very, very important. If it gets out of hand, look, I've been saying this for years. It's in writing. It's in our book, The Cynic's Guide to Investing. Published in 2015. I said, look, if we the people, and we the people through our elected officials, do not grab this bull by the horns and correct the many problems that we have right in front of us, if we don't do it, the market will do it for us. And that's exactly what we are staring in the face right now. And I can assure you that those who truly understand this, and I do believe that Jay Powell is one of them, I do believe this, they're shaking in their boots. They're scared you-know-what-less. Because you can print as much money as you want. But if the market says, that's it. It's like the Federal Reserve being able to help a liquidity problem, but not a solvency one. Virtually the same difference. Except here, who's going bankrupt? The United States of America. And these eggheads can talk all they want. Well, that's, theoretically impossible, or it's realistically it's impossible because we have a printing press. Well, if everybody thinks it's junk, makes no difference, as far as I'm concerned. Makes no difference. Print as much as you want. Go ahead. See what happens. Free was never so expensive. This is the path we are going down. And as long as the stock market keeps going up because of it, Thunder Thumbs couldn't be happier. So there's nobody that's going to check Jay Powell and these idiots. Stock market goes up, Trump's happy. They're printing money. Republicans, Democrats in Congress aren't going to challenge the Federal Reserve because he's doing them a favor. The favor that they don't have to go back to their constituents and tell them the truth. We messed up. You live beyond your means. No good. You want to pay for all this stuff? I'm going to have to raise your taxes. Oh, hell no. We can't do that. But we can do it through the printing press. Politically expedient. Another way to kick the can down the road. Put it on somebody else. Yeah. A couple other things to pay attention to that I thought were interesting. Saw a report this evening on Bloomberg that Kyle Bass, hedge fund manager, we've talked about him here before. He has a big bet, pretty much putting all his chips on this bet. It doesn't surprise me because he's been talking about it for years. 200 to 1 leverage. 200 to 1. He's got to be borrowing money on borrowed money with options on futures contracts. 200 to 1. Betting that the Hong Kong dollar will break its peg, which is what we have been discussing here for quite a while. He has 18 months, according to Bloomberg reporting. Kyle Bass putting on a huge bet, 200 to 1, that the Hong Kong dollar will break its peg within 18 months. I told you this was coming. Again, I still don't know how Hong Kong hasn't collapsed now. I think today marks the 1-year anniversary of their protests. And they'll be picking up again, make no mistake about it. As they will around the world. They will continue. They will continue. They're here. Another thing to pay attention to. Oh, and if Kyle Bass is wrong, he might end up broke. So he convinced his investors that this is it. Now, I'm sure they're going to be doing some other things, possibly, but when you're 200 to 1, there ain't much any type of hedge is going to put on for you. Okay, so there'll be something to watch. I mean, this guy, if he's right, he'll be up there on the Forbes 500 list. Something else to keep an eye on with the reopening. Now, the media doesn't cover much of COVID-19 anymore because of all of the protests. Say what you will of that. But due to the reopenings, there is an increase in cases in both Arizona and Texas. So pay attention to that. And also pay attention to the COVID-19 cases that continue to climb in Brazil, in India, in Bangladesh, and in Pakistan. This ain't over, folks. Think of it what you want. Kept the economy closed for too long, which I happen to believe. It's a hoax, which I don't think is the case. Overstated, perhaps, but it is real. This is far from over. And I have always been concerned about India. Country of 1.2, 3, 4 billion people. Big cities, close together, poor health facilities, not enough, poor infrastructure. I mean, who knows what the real numbers are? Can't really trust the government there either. And do they have the ability to really count everybody who is infected? Far, far from over. But the worse the news, the better the stock markets do. You heard it here. YCC, yield curve control. Because if the Federal Reserve really comes out and supports this, to me, that is the sign that they know that they have lost control. And they have to come out and pretend to do their damnedest to convince the markets that they can still have this within their grasp, within their control. And maybe, just maybe, for a short period of time, they'll continue to convince the crackheads on Wall Street that they have some semblance of control. That they are still a sober captain of this ship. Even though they've been drunk and tossed overboard a long time ago, in my opinion. They will do their damnedest to convince the markets. But once the markets wake up, it's going to be game over. The Fed losing control. Look out tomorrow. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.